The Canadian Agri-Food Policy Institute is driving bold policy solutions for a resilient Canadian agri-food system and building a stronger future for Canadian agriculture. Visit capi-icpa.com to discover how.
Sean Haney here with Real Agriculture. Let's talk markets and bring in Chuck Penner of LeftField Commodity Research out of Winnipeg, Manitoba. How are we doing today, Chuck?
Good to be with you, Sean.
It's good to chat with you as well. Okay, so Chuck, recent conversations lately, I've kind of come to the conclusion that canola's taken up a lot of the oxygen. You watch the mainstream news, we hear about tariffs, and it's always in reference to canola. Now, canola's an important crop. There's like 20 million acres of it. But there's also pulses, and peas specifically kind of feel like a bit of they're getting the double barrel right now. We got Indian tariffs, we got Chinese tariffs. What is going on right now in the overall pulse market? Because I'm hearing a lot of concern from growers in terms of what this looks like, not only in the 25 crop, but looking ahead to how much pulse should I actually plant in 26?
Yeah. It's kind of a bit of a situation. I had actually expected it to be even worse. When this news started rolling out,
Okay.
I expected the reaction to be even worse. Um, the fact that, pulse prices were coming down, we knew they were coming down because we were expecting big crops and not just in Canada, but elsewhere too. So pulse prices were already coming down in the summer. And then there's a post-harvest recovery, price recovery. And that's not been happening, but they haven't dropped further. Like that was my fear, is that they could move contra seasonally and move lower. But even yellow pea bids, green pea bids, even maples. Although it's a little harder to find a bid on greens and on maple peas. But yeah, these tariffs are certainly putting uh, headwinds in the face of these crops. And maybe even though prices are steady, you could contrast that to say, well, what if those tariffs hadn't been in place?
Right.
Then we would be seeing more strength, right? If China and India were both buying yellow peas, we would be seeing stronger prices. We still have huge supplies in Canada, no question, but we would be seeing some stronger prices. So it's more the what if. Here's the possibility of what it could be, and we're still kind of here in reality at these lower prices. But yeah, it's certainly not the case. Looking at Chinese trade data, Indian trade data, well, they're going more toward Russian peas. I mean, the Indian tariffs are on everybody, but the yeah, it's certainly putting a bit of a tough face on it. The one thing that is happening though, for peas and for lentils, I would say, is that it's the classic market response. You drop prices and you raise demand. So even though we're not shipping much to China, and we'll start dropping off to India, we have been moving some decent volumes of yellow peas and red lentils, and from what I'm hearing, green lentils as well too. Some pretty good volumes already, close to average levels, in and
Okay.
around that. So I think what's happening is we're picking up more business from some of these other countries like Pakistan, Bangladesh, some of those types of countries that normally wouldn't be buying, or they haven't been buying when prices in the last few years were high. Now they're returning to the market. So it's helping cushion that. But again, it's like, what if? What if you had China and India buying full tilt? Where could prices be? So like that's where we're kind of at right now.
Well, and with both China and India, a part of what allows them to apply the tariff is they might not need as much inventory as they would if the tariffs weren't there, right? So it affords them the ability to do so. Is that seems to be the way it is in canola? Is that the case when we look at pulses?
Well, China is one, like India applied tariffs across the board
Yeah.
to everybody. But we're seeing already that their planting of the pulse crops this winter, which are peas and lentils and chickpeas, the acreage looks like it's down. So, they might need to reconsider that at some point. But it's all in response to prices. So when India applied tariffs, their domestic price rose, and that's why our price didn't drop as far. So it kind of offset that to some degree. In the case of China, it's different because they can import Russian peas. Russia grew like well over 5 million tons this year, so they don't have a problem displacing that. But I would say about China and maybe India, they can leave these tariffs on for quite a while, but at some point they're going to come off. Like, it's whether it's this year
Mhm.
or next year, at some point they're going to come off, and then there will be a strong market reaction. I don't think you want to bet your marketing strategy on, China in April is going to, drop the tariffs or things like that. I'm not saying they won't, not saying they will, but that's a bit of a risky thing. But at some point they will. That's the nature of it. But they can leave them on for extended periods.
You think back 5 years, Chuck, we were hearing so much about, the potential demand increase for pulse crops related to plant protein and, the demand for protein and the role that plant protein would play in the overall protein complex. We sure do not hear or see headlines about that right now. It is really
Yeah.
quiet down, my friend.
Well, even when the buzz was the greatest about all of that, if you kind of scaled or if you kind of like did some of the math behind that, it still wasn't going to offset China or India like completely. It wasn't going to replace that kind of demand. It was still relatively minor, and of course now that it's faded. But I would say is you don't have the Beyond Meats and the Impossible Burgers and the
Yeah.
those kind of things anymore. But the demand for pulse proteins in other products is still quite strong actually.
Okay.
So, but no, it was never going to be 1 million tons of demand or that it's and so it's just kind of uh, so yeah, it's never believe the market buzz, put it that way.
Yeah. So something else and I'm going to take an issue in other crops and see if it also applies in pulses with peas and lentils. Right now with canola, soybeans, and corn, there's trade issues for both Canada and the U.S. And so we're hearing we need to have some domestic demand nation building projects to try to deal with some of the supply. So the biofuels, really, whether it's ethanol for corn or it's renewable diesel when it comes to canola and soybeans, depending which country you're in. Is there an equivalent when it comes to pulse crops, or is it listen like this is going to be an export reliant market?
Yeah, nothing to this scale. I mean, the type of scale that you see or we are seeing or have seen in the canola expansions and all of that kind of stuff, the canola crush, not to that extent, certainly. If there are lots of small projects, and I guess you can start adding those up, and you could come up to some tonnage, but no, we're still going to be reliant on the whole situation. I mean, we have been in some ways we have been really lucky in the past, because in 2017, late 2017, that's when India first put tariffs on peas. And so the Indian demand dropped, but that's just when Chinese demand was taking off.
Mm.
And then, when Chinese demand started to fade a little bit and Russia started entering that market, well, that's about when India dropped their tariffs to zero. But now we got both of these things happening. And again, they're not going to last forever. But it's like, how long can we wait? These countries have a tendency of, putting these tariffs in place for like 2, 3 years at a time.
Yeah.
So I'm not expecting a quick resolution. Um, but it would be great. I mean, our at least, and I don't mean to speak well of the current administration in Canada, but like they're making the right noises anyway with respect to both India and with China. Now, I don't expect a deal with India to cause pulse their P tariffs to drop because again, they're global, like they're applying them to all countries. Um, but there is a little more friendliness anyway, less antagonism, put it that way,
Yeah.
between these countries. And so that's a real slow grind of a process, but so sort of. Uh, Hopefully, we'll see some signals that way, and or some resolutions that way at some point.
Canadian farmers have really led the charge when it comes to the growth of the pulse industry. Farmers in the northern tier of the United States look across the border and say, we have the same conditions. Why not here? But do you see a big potential for growth of pulse acres in the northern part of the United States?
Um, it's a different market down there. In large part, a lot of the pulses there move as a result of food aid,
Yep.
tenders and things like that. So it's less of a free market, if you want to call it, or a free flowing market anyway. So there's some stability there. But I see, and they do export some just through regular channels as well too. But a good chunk of it is this tender business, a food aid business, and who knows what the current administration. I mean, they've already been slowdowns in that or cuts to that, and so it's affected it to some degree. So it'll partly be driven by whatever the winds from Washington are. Yeah.
Yeah, well, I wonder about that because, with all the attention on China, of course, that's very Midwest driven when it comes to soybeans. Don't expect peas to be like number one on the agenda, but that, if the acre got big enough and the lobby voice got loud enough, Canada could definitely have some competition long term when it comes to that market.
Yeah, certainly so. But there would need to be a change in their market structure to do that. And nothing to say that, the companies down in the US couldn't do that. It's just they haven't to date. But yeah, I think it could too. You're right.
When we look at 26 in front of us, do you see a bit of a turnaround here in terms of how farmers feel about the pulse market? Because anecdotally, I feel like a heavy a cloud, like a weight in terms of how people are looking at this market right now.
Yeah, there is. I mean, there are people who keep pulses in their rotations just for crop.
Regardless, yeah.
Yeah, regardless. But yeah, you'll probably it'll be one of those dips. We've had them before. I mean, this is a serious headwind, but it'll be one of those dips in acreage, and yeah, and probably rightfully so. That's how the market adjusts, right? It's when you have low prices cure low prices. Well, how? By, like I said before, increasing demand and also reducing production. So it's kind of a necessary step that we need to go through to get the market recovering, quicker. So it would probably be a good thing for the market if farmers did back away to some degree from pulses in 26.
Yeah, a lot of mainstream radio interviews will ask me, are farmers going to plant canola next year? And yes, they are. They are. Probably a greater probability there's a greater reduction in the pulse acre than there would be on the canola acre. But I don't know. We'll see how that pencils out when we get a little bit closer to springtime. Ascochyta, or not Ascochyta, Aphanomyces, I should say. Aphanomyces is probably a bigger threat to the pulse acre than some of the marketing things that are happening.
Yeah. Well, it certainly put a ceiling on it. That's for
Yeah.
sure. Yeah.
Yeah, it's
Yeah.
interesting dynamics. Hey,
hmm
before we go, you've got some workshops coming up that LeftField Commodity Research is putting on. You're looking at seasonality.
Yeah, we're doing a couple of them. We're doing one in end of next week. It's in Elm Creek, Manitoba. That's
Ooh,
my old
nice.
stomping grounds.
Nice.
Yeah. So we're going back there. We're going to the golf course, and we're going to put on this workshop, and then we're going to do one in January 16th in Saskatoon, which is the day after the crop production show. So if people are in town for that, then they can just stay for that. But yeah, like it's probably different than I don't know if it's ever been done before or to this extent anyway. So we've taken all of our price history and all of that kind of stuff and done all kinds of calculations and to see how seasonality is, but also how consistent it is. How like can you actually shape your marketing plan around seasonality? And so looking at how do prices respond after harvest? When is the high? And it's different for each of the crops has its own particular high. A bunch of them are in spring. Some of them are in November. Those types of things. And then, can you shape your marketing strategy? And we've done this little thing with like creating a sample farm and just looking at, if you spread your sales out evenly throughout the year, which I know nobody does, or if you price them only in the month of that this normal seasonal high happens, how would that work out? And we've done it over the last 9 or 10 years. And for a farm of about 5,000 acres or so, like it averages $100,000 a year higher just by selling in that month.
Wow.
Now, again, I don't, people can say, well, I can pick the market better than that. Well, fine. But there is something real to that. And some of the years, there's a couple of years where it didn't work out. But All of the other years it did. So yeah, so we've taken all of this stuff and we want to use history as a guide to the future. Because markets are cyclical and they do that, right? They move regularly. So anyway, so that's the plan. We got these sessions in on December 5th and January 16th. And it's going to be very interactive. It's going to I'm going to be wanting to get feedback from people and, how do you market? When do you market? All of that kind of stuff. What are the triggers? What are the signals that tell you when you pull a trigger on a sale? Like what is that, right? And so I want to learn all of that from the group and then also maybe help them a little bit too.
If somebody's interested in registering, how do they do so?
Go to leftfieldcr.com. On the notes page, there's more details, the cost and the logistics and a bit of an outline of the day and stuff like that. And then they can just respond with an email that's on that information sheet.
Great stuff. Hey, Chuck, thanks so much for joining us here today. I really appreciate it.
Thanks, Sean. Okay. Talk to you later.
For the latest ag news, agronomic advice, and more, check out RealAgriculture.com and Real Ag Radio.